Got S&Ps close to unchanged with 30 minutes left. Kevin Green joins us. So look at the levels into the close and for next week. So we have generally been kind of pinned here, sort of around the same spot, KG, a couple almost unch days in a row. Does that make sense to you?
Yeah, it kind of does, actually, Oliver. It's nice to actually see the progression that we've seen on a day-by-day basis. When we started the week, we were really kind of focusing on that 5,400 level as an area of resistance. And on Wednesday, we were able to break that, and the new area of resistance became 5,450. But if you kind of look for the next 3 days, Wednesday, Thursday, and Friday, that's actually been moving to the downside, 5,350, moving down to 5,330. Even this morning, we were actually sitting around 5,320 this morning. Now, we are actually looking right now at the open interest chart. Here, let's focus on this chart and let's not move to the other one yet. The big focus for this week, though, Oliver, is that we have a Friday expiration today, right? So we're going to have a whole rebalancing effect, if you will, when it comes to the option levels for next week. So looking forward to that on Monday. But also note that we do have a monthly expiration next week, Friday, and then we will have a quarterly expiration that does also consist of these JP Morgan collar positions that can actually impact markets. But if you're kind of looking at it going to the next chart here on the volume basis, that step down is once again one of those areas that you want to kind of keep in mind. If you are a bull in this market, we're not really progressing. In fact, the walls are getting higher, lower and lower, making this compression. Now we're kind of hitting up into the upper end of that wall right now. If you're looking at the S&P 500 going into the close, but it is kind of concerning that we continue to test that 5,400 level on an intraday basis. We're getting very close. We got very close today around 3 different times before trying to push higher. For next week, if you are a bull, you want to try to attack and hit that 5,450 level. I have that in gold. Very key in order to keep this momentum going. If we break down below this 5,400 level, that is an area of concern because we are still seeing some flows on the put side. Some dealers are hedging, some institutions are hedging, and you really don't want to see that build up in puts going into maybe a lackluster momentum after the FOMC meeting, if that makes sense.
So, yeah, I like your description there, lackluster, right? But it does kind of fit with the levels we've been monitoring that have, I mean, like we called them guardrails, I think, at the beginning of this week, kind of the way I think about them. I don't want to get too carried away with that, right? Because guardrails can break, But that's kind of how they function this week. It really seems like we kind of kept, in that kind of framing, we sort of kept cool heads in a way. I know a lot of people were looking and hoping for big like melt up style. We got one spurt of that and then nothing more, but we also didn't like give it all back up either. So, I mean, you could kind of argue that this was a tempered kind of climb for the index.
Yeah, a little bit. Now, if we're talking about market breadth, though, it kind of got weaker and weaker. So that's once again not really a good sign that you want to see if you are a bull, because it is on the back of a couple of different names. And I was going to bring up Apple earlier today, but Apple is a very good example of that melt-up scenario on the gamma side that it really actually provided a benefit for the broader market just because of the rapid moves where we had 5% moves to the upside, 3% moves to the upside here. And this is kind of that chart that's really signifying that. Now, where's that line in the sand for Apple? It's going to be the 212 area, 212.50-ish area, which is kind of where we're trading at right now. But if you kind of notice on the right-hand side, Oliver, we still have a lot of bulls that think that this thing can still run to the upside going into next week, and that is going to be a key thing to watch for. If we break through 220 will then open up the floodgates, if you will, for an advancement to the upside, a continued advancement to the upside. Now, you're going to need some good data. You're going to need some positive stock flows and equity flows in order to do so. But even if we just take a slice of these companies out of the S&P 500, especially the bigger ones that have a fair amount of impact on the broader equity markets, we can kind of see that we are, bullishness is still being priced in for the bigger names. Is that going to drag up the rest of the index over the last 2 days? That just has not been the case. Let me also talk about going into the close here before we wrap it up.
Yeah.
There is a significant amount of buyers hitting the 5440 calls right now. So you kind of talk about these ramps, and I know you want to see a ramp for Oliver. I know you want to see one.
Or a crash. I'm getting claustrophobic in these ranges, KG.
It does appear that we're getting a lot of buying flows for today's expiration going into the close. Those zero DTE expiration traders out there hitting the 54.40s. We're sitting at 54.28 right now. So if those flows continue and we do see some positive price advancement, that's where you can kind of see these gaps to the upside. Look for 54.20 as our area of support. There is a negative gamma level that is there. We tested it on an intraday basis several times over the last 2 hours, but the upside move or that ramp type of scenario may actually come here today. 54.40 is what you're looking for, another 10 points higher from where we're at.
Okay. All right. Still, we haven't been able to do that quite yet. But I like also the comparison of the index to the companies, the way that relates. Kind of seems like we're like at the sweet spot for Apple. Maybe that's why we just kind of fizzled out here today for Apple. Similarly, kind of the levels that keep us contained in the index is similar too. So unlikely to get anything like big, it seems like this afternoon. We'd have to start moving pretty quick, like now.
I mean, sometimes it happens the last 10 minutes of the session. I mean, if you actually looked at yesterday's session, we had a ramp up and then we faded like 8 points or 9 points with only 3 minutes left to go in the trading session. So we can see a lot of volatility, especially on days like today. One thing to note about Apple, though, you're not seeing the put side flows on Apple like you may see with some other stocks that ran maybe too far, too fast, where speculators do believe that there's going to be a correction. As I kind of showed with that chart on the open interest, that's just not the case. In fact, we have more layering to the upside and more speculative flows to the upside for Apple. So maybe a cooling off period here today, but the market is positioning for Apple to continue this run to the upside going into next week.
Okay. All right. It's been quite a move for sure. And S&Ps, from the index level, really generally held on to it. So all this kind of breadth discussion is fun from a analytical standpoint, but as far as the index level goes, as far as these major gamma levels go, just that hasn't really mattered so much, the kind of breakdown breadth-wise when we've got the big tech companies driving the action. Good stuff this week. KG, like the perspective. Looking forward to more. Appreciate it, sir.